Hello and welcome to another update video about Ethereum. So Ethereum continues to move into the apex of its triangle, and I think it is decision time. We react very nicely to this triangle shape here, up and down, yeah, very nicely, and the market is forced to make a decision. Now, I've seen it sometimes, they just carry on sideways and doesn't really bother about the triangle, but then something is going to happen. But it's certainly worth watching when a triangle moves in, or when the chart moves into the apex of a triangle, as the buyers and the sellers really haven't come to a conclusion yet about where price is supposed to go. So the market is still in a state of uncertainty. Triangles are always representing a balance of forces. So the buyers and the sellers pretty much have the same strength here on the weekend, okay? So the market has no preference. We, however, move into the direction of a price where buyers and sellers seem to agree that a decision will be made, and this is going to be sometime today, in my opinion. Yeah, at least it looks like that. I mean, if it still moves sideways, it is what it is. Anything can happen, but it's all about, typically when you move into the apex of a triangle, a breakout should happen. Now, nothing will happen if buyers and sellers still can't agree, okay? But normally, towards the end of a Sunday, towards the end of the weekly candle, there is some increased volatility. And bear in mind that next week we have the Fed meeting, the FOMC meeting, and we will get the next interest rate decision. Now, I've seen it sometimes that these triangles do extend. So what currently looks like a nicely defined triangle may become something like that. You will ask, how is that possible? Very easy, very straightforward. It could just simply be we do this. It could still be an Elliott Wave triangle, but it will be an extended one. So always be prepared for that, because until, and I gave you those levels in the last video, until we break below the decision point or above the decision point, the triangle can always extend. If the triangle breaks to the upside above 1963, we do have an invalidation of the triangle, and the triangle would break into the opposite direction of what has been intended, and I would not count it as a triangle anymore. Yeah, at least not this way. And we will probably get a higher B wave. Now, we talked about that in the last videos, that in this current wave 2 in which we are, which is the correction of an impulse. The impulse occurred between, what was it? Let me just check, 10th of March, and here I think was the 16th of April, yeah? This pattern is currently correcting that impulse. And in this particular pattern that we deal with here, we are looking at an A wave, which is probably complete, a B wave, and a C wave to the downside. Now, this B wave, as I said yesterday, can unfold as a triangle, or we can get a higher B wave. The higher B wave, however, will only be confirmed above 1963. The other decision point is if it breaks down of this triangle, but then I would need to see some evidence, and the first indication that the triangle is really breaking to the downside is a break below this low here, the D wave low, highlighted here in yellow of the triangle, which is here at around 1876. So a break below that would be a strong indication that the triangle breaks into the intended direction, which would be down. Because eventually in this wave 2, we are looking for another wave down in a C wave. These C waves often occur as ending diagonals, so they are a bit difficult to forecast. Good to know is that it can be a diagonal, so we need to be on our toes. A diagonal pattern is typically, basically a 5-wave move that looks very flat, because buyers start to step in. That would typically then indicate the reversal of a trend is coming, the reversal of this sort of local downtrend into an uptrend. But we're not there yet. But when we spot that on the chart, we can identify possible breakout points, and we can also identify that a trend reversal should be coming. So ideally, this C wave will be drawn out, boring, and quite flat, because sellers, there's still people selling. The sellers are still stronger, but more and more buyers are coming in again. And at some point, especially if we can identify something like a descending wedge, it's of course too early for that. But if we can, then this would indicate a possible breakout point to the upside. So just to show you what could happen, just very, very speculative at this stage, something like that, a descending wedge, you often see that in a C wave. And we could be doing something like that. 1, 2, 3, 4, 5 in wave C, and then we rally in a third wave. Okay, so this is often what happens in the C wave, so-called descending wedge. A lot of people don't know what a diagonal pattern is because it's an Elliott wave pattern. It's a bit more complex to understand. There are clear rules around it, but a lot of people know what a so-called descending wedge is. It is typically classified as a bullish reversal pattern, and in most cases they indeed break to the upside. Not always. In my experience, around 20 or 25% of them indeed would break to the downside. So you never really know. It's all about likelihoods, right? Okay, but that's sort of my update about Ethereum. Not too much more to update, but today we have to look for a decision. I hope the buyers and the sellers can agree. The levels, the breakout levels should be clear. And relevant support for the wave 2 eventually is 1754, 1663 and 1533. As long as we're holding 1553, 1533, I'm still going to be focused overall on further upside. Below that level, at least bear market lows will become much more present and likely. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.